Well, that escalated quickly. Minutes after Donald Trump blasted out a Truth Social broadside about the Federal Reserve, gold ripped higher on our screens, about $30 in 20 minutes. That's not astrology. That's policy risk hitting the tape. Trump says he's removing Fed Governor Lisa Cook, posting the letter publicly. It's an extraordinary move aimed right at the Board of Governors. The Financial Times and Reuters both confirmed the action and the posture behind it. This follows a month of pressure campaigns. Trump has urged the Fed's board to sideline Chair Jerome Powell and assume control if he doesn't cut rates, an open challenge to the central bank's independence. Global central bankers, yes, at Jackson Hole, are openly worried about the precedent. Politicizing the Fed risks financial stability and credibility. Translation: higher risk premia, more volatility. Can a president actually fire Fed governors? Sort of, if there's legal cause. By law, governors serve 14-year terms and may be removed for cause. Think misconduct or neglect of duty, not just policy disagreements. That's been the consistent view of mainstream legal analysis for years. Any attempt to stretch cause into "I don't like your dot plot" heads straight to court. Why would Trump want this? Let's drop the euphemisms. Installing loyalists at the Fed can force a faster, deeper rate cut path, or at least jawbone it, which would juice risk assets in the short run and weaken real yields, classic bullish gold fuel. Consolidate control of the policy narrative, heading into a choppy macro stretch, deficits, tariffs, dollar politics. Create a chilling effect inside the Fed. Even if courts swat removals down, the message lands: vote with the White House or get lawyered up. None of that guarantees prosperity. It guarantees uncertainty, and gold loves uncertainty. Why gold spiked and why it might keep rising. Fed independence risk equals risk premium. Markets price in the chance of policy mistakes and credibility damage. That pushes safe haven demand higher. Central bankers literally flagged this risk today. If the market believes cuts get pulled forward or are larger than the data would justify, real yields drift down. Gold doesn't pay a coupon. It thrives when the opportunity cost falls. Firing a sitting governor publicly signals more battles to come. Powell's term ends next year. The process story alone can keep volatility elevated. While we're on governance and credibility, a reminder: Trump is already a convicted felon in New York for falsifying business records. He received a non-conditional discharge in January. The conviction stands. That doesn't make him wrong about monetary policy, but it does make the Restore Integrity sermon a tough sell. Separately, a New York appeals court just threw out the $500 million civil fraud penalty, even as it left core liability findings intact. So expect both sides to wave that around as proof of everything. Markets care less about the spin and more about how the power struggle bleeds into policy. The White House can't lawfully purge the Fed for policy reasons. Attempts will be enjoined. The institution will hold. My take: courts may ultimately check removals, but the process risk, letters, threats, litigation, vacancies, is enough to move markets now. The message to investors is brace for political volatility embedded in monetary policy. That's supportive of gold until the governance path is clear. How I'm thinking about it as a trader: treat Fed headlines as catalysts, not trends. Expect gappy moves, then digestion. Watch real yields and DXY. If either rolls over on the narrative, gold's dips will be shallow. Respect levels. Policy drama doesn't repeal technicals, it amplifies them. Confluence is greater than bravado. Even if the legal bid trips Trump up, the uncertainty premium is real. As long as the market believes the Fed could get bent out of shape by politics, gold will keep a safety bid, and every spicy post will keep the tinder dry. Visit thebarcelonatrader.com for all your gold trading content. Thanks for watching.